You've been with Schroders for quite a while, and you're seeing Schroders as a powerhouse of the region. What have been the strengths of the business?
I think Schroders benefits very much from its history, which you're quite aware of, having worked there a number of years ago. We started our business in Asia with businesses on the ground around 50 years ago. And when we set up our businesses here, we set them up as local asset management firms. So local investors managing local equity, local fixed income for sale to domestic institutions and through domestic distributors. We're now benefiting hugely from that history because we've built up very strong relationships with all of the local distributors and local institutions. And then on top of that, we have very strong relationships at a group level with the global distributors, the Citibanks, the HSBCs, etc. In addition, because we started actually managing money in these local markets 50 years ago, we've built up a huge amount of domestic investment capability. So we have the best of both worlds. We have the best of sort of being local, and often we're perceived as being, a local manager, but also the advantages of being global.
Do you manage money in all locations, or are you selective?
We manage money in all of our locations.
And is that for local or for global management?
For both. So it started out, as I said, for local,
yes.
So managing a local product for local consumption. And often these markets started such that the only product you could sell was a local product. Indeed, some markets in the region are still like that. So Indonesia, you can't sell international product in Indonesia. You can only sell Indonesian equity, Indonesian fixed income. And that really has been the route of development for most countries in Asia. So,
for example, in Singapore and Hong Kong, where you have your two largest teams, would you manage, say, European or American equities from those locations, or would you just focus on Asia?
We just focus on Asia.
And so how do you access the rest of the world for your clients in this part of the world?
Well, we obviously now have the ability to sell our international investment capability into local countries where it's permitted. And that's certainly the case in Singapore and Hong Kong, has been so for quite some time. So our global strategies, our global emerging market, European equity, US, are managed outside of Asia.
So you're a strong advocate of the UCIT type of product, the product that can cross borders?
Yes, but I'm also a strong advocate of local fund ranges as well, because there are some products, Singaporean equity is unlikely to be a particularly popular choice outside of Singapore. And therefore, the ability to launch that locally and get the fund to a sustainable size locally is important. We would struggle to be able to launch, for instance, Singapore equity in a UCITS range.
As a business, you said you focus on the bigger international distributors. Have you excluded small distributors from that?
No.
Financial advisors? Or?
No. We're very supportive of IFAs. And in some countries, they make up a very, very large part of our distribution network. For instance, Australia. When I look at our book and have a look at the levels of asset turnover, generally IFA-sourced assets have a lower level of asset turnover than assets that have been gathered through other distribution channels.
Are there price pressures for a fund company when dealing with big distributors?
Yes.
Do you cope with them well?
We cope with them as best as we are able. It's a reality of any market situation. If the distributor owns the end client, then in many respects they're largely in the driver's seat for negotiating fees and fee splits.
In the UK and Europe, Schroders have already started taking steps to cope with the advent of a zero commission environment. Are you ready in Asia if that should happen here?
Well, we certainly have the ability to do that in markets which are more towards that end. For instance, Australia. We have a large business in Australia, and that is very much heading in the same direction as UK under RDR. We have the ability, and I think because of our local fund ranges as well as our offshore ranges, we have the ability to customize different share classes and financial arrangements, perhaps in a way that others without the local fund platforms would struggle to be able to do.
So, for example, in your UCITS platforms, you're going to have no load and low fee share classes.
Indeed.
Would you wish to prevent Asian investors getting access to them, or are you going to be open to that?
We would probably be open to it. I think ultimately the market is heading in that direction, and different countries are going at different speeds, as we know. Now the trick is going through that transition without actually diminishing the end investor's ability to get and to access proper financial advice. And I think that's one of the challenges in this whole transition. And it will be interesting to see the experience of the UK. The UK has had an IFA structure that has functioned, I think, generally fairly well. Now we're already seeing that a number of IFAs are leaving the business, are being consolidated. And if ultimately we end up with an industry that advice is cheaper, but the quality of advice or the ability to gain that advice is much reduced, is that a good outcome?
Yes.
And I think that's what's going to be interesting to sort of see as we go through this.
I suppose I would say famously Schroders have been very much focused on organic growth. They've built up a business and developed in different markets. Do you look at all to make acquisitions, or are you not interested?
We are interested in infill acquisitions, not transformational acquisitions, because we believe that asset management is not the sort of business where transformational acquisitions are easy or have any real track record of long-term success. So an example of an infill acquisition would be we purchased a minority holding in an Indian asset management company just recently. Indeed, the deal will complete in the next week or so. And the reason we've done that is because we have a long-term interest in participating in the growth of the industry in India. We think it's a very big, a very complex country, and therefore we think the right way to access that country is with a strong local partner. So we've been I've personally been looking at that market for more than 7 years, and we finally took the step to partner with Axis Bank in this asset management joint venture.
So we hope it'll be very successful.
We hope it'll be very successful, but we're realistic. It's not going to be super successful in 5 years. It might start to be in 10 years. I hope it will be in 15 years. I
You've
think
got time to wait.
You do have to be realistic about how long some of these emerging markets are going to take to become meaningful contributors to the bottom line.
Okay. Thank you very much.
Thank you.